optimistic jobs report in the U.S. last week isn't swaying the top nation's top bank. We're talking about Fed Chairman Ben Bernanke, of course, Bernie.
That's right. Testifying before, as he does very often, before the Economic Club of Washington, D.C. this time, warning investors that serious concerns still lie on the horizon. Brian Weiss is covering the story and joins us from where else? From D.C. Well, Brian, it sounds like more of the same in many ways, but at least we're going to enjoy low mortgage rates for the time being.
That's for sure, Bernie. It seems like Ben Bernanke almost ignored the jobs report coming out last week. And when Ben Bernanke talks, investors listen. Today was no exception. The Fed chairman firing a warning shot at a speech here in Washington, saying that despite market gains, despite those signs of improvement in the U.S. labor market, the U.S. is still sailing into what he called formidable headwinds. Bernanke did say that there are plenty of signs of recovery out there, but if investors are expecting a quick rebound, they better think again.
The most likely outcome is a moderate pace of recovery. There do seem to be enough forces in play to sustain a recovery going into next year. At the same time, there are headwinds like tight credit and high unemployment, which make a vigorous snapback seem somewhat less likely.
No, that comment was a hard pill for U.S. investors to swallow, causing a moderate sell-off in U.S. stocks. As far as the dollar, he went on to say that inflation remains subdued and might even fall lower. The translation for many traders: don't expect the Fed to raise interest rates anytime soon from the current record low. The Fed will consider an interest rate change next Wednesday, and Bernanke previewed that decision today.
Looking at the extended period, given that conditions remain low rates of utilization, subdued inflation trends, and stable long-term inflation expectations. That remains where we are, but we're going to have to continue to look at the economy. Obviously, there's been some signs of strength recently. We'll want to factor that in as we talk about this next week.
Now, those rate decisions used to be a fun guessing game here in Washington and on Wall Street. What will the Fed do? But Bernanke's comments today indicating that the bank's target rate not likely to shift for quite some time. Back to you.
Yeah, so they're trying to temper expectations. Brian, before you go, I got a question for you about Bernanke. Did he also make comments about these firms that he calls are too big to fail? What did he say about them?
Yeah, making some strong comments today on those institutions. He said that no firm should be permitted to, quote, hold the financial system or the American taxpayer hostage. He renewed his message to Congress that his agency should have the authority to monitor and regulate those big, risky firms that could be a domino effect for the rest of the market. Congress, though, there are members of Congress that actually want to strip the Fed's powers away from them for their lax oversight. So we'll have to see where it goes from here.